we're going to be talking about the euro dollar now. Now, I strongly suggest you take a look at the dollar index, the previous video, because it's going to be it's always best. Well, for me, once again, the way we trade here is we trade based on the bias or based on the directional, the way the dollar is actually forming for that given day. I'm more of a swing intraday trader, by the way. And I think this week you're going to find it. I think it's going to be in one of those um, eye openers or those light bulb moments. And I think I'm going to show you something really valuable here. So let's go ahead and break this down. Once again, the monthly zones are considered my purple zones. The red zones are considered my weekly zones. Okay. And all I'm showing you here is just pretty much like we're in this triangle formation coming out of the monthly support. Let's go ahead and break it down to the weekly. I'm sorry. How it bounced off the weekly. It actually came to weekly resistance. And this is where I want to pause this. I want to pause this because I'm going to show you something that was recorded back in May 3rd. And let's see if I can maybe start from right around here. These levels, guys, are not there. I'm not adjusting them. I'm not even adjusting them every day, every week. Sometimes I adjust them once a month or once every 2 months. So far, I haven't adjusted my levels for the last 3 months. It doesn't take that much. It will at the beginning, and depending on how many pairs you trade, as you can see, I have all 28 pairs in here because I trade all 28 pairs. I don't trade them every day, but if I happen to stumble on a good pair and I'm coming into some kind of weekly support, daily support, coming into 4-hour demand, I'm taking it. Okay, so let's go ahead and proceed on the lower time frames. There's really nothing to look at on the weekly. Yeah, I did bounce off daily supply, and we'll talk about those yellow zones. But that's the red zones are considered my weekly resistance, weekly support. It did get a good bounce out of that weekly resistance area. Now we're breaking it down to a daily time zone. Now the yellow zones are pretty much considered my daily supplies and my daily demands on the bottom. So considering that we were pretty much in monthly, all right, remember guys, these are my daily demands. The yellow zones are always considered dailies, whether it be that's demand and that supply up there. This was created back in May 3rd, guys. Area of support, we created daily demand as well. And last week we were talking about how this could possibly be short-lived if the dollar didn't. Let's go ahead and pretty much dollar forward a little bit down. More, and then you'll notice how this was recorded. The last candle here. Let me see if that's the last candle. The last candle here looks like it was April 30th or the beginning of May. So let's go ahead and take this out the way. And let's bring it to the daily current beginning of May. It was right around here. Okay, these candles didn't exist, but something that I want you to know is that it came not exactly, didn't really penetrate the weekly resistance, but it came right around there. Now, I don't know if you guys are more like into if you guys believe in the quarter theory, but I'm a strong believer in the quarter theory. And for me, it would have been the 1425, 1420 area. Okay, and the highs it made 1423. 1420 is good enough for me. They don't just come to these levels for no reason. So why do I have? And if you'll notice here, I have this alert here that calls out the 1425. Why? Because if I get a 4-hour candle breaking above, then most likely that daily supply is not going to get respected. Okay, and now I got to really be careful. Now, am I saying that I'm picking the tops and bottoms? Absolutely not. All I'm saying is that once we come close to these higher time frames, supply, demand, support, resistance, it's hands off. What it means for me hands off is that I'm not touching the pair until it shows me whether we're going to break it or are we going to get a bend. Now, if obviously we can't really see it that well on the daily, I mean, you can now that it's kind of breaking down. Okay, by the way, let me go to the daily back again. Even though we're coming down into daily demand. So just because we're actually breaking down doesn't necessarily mean, okay, let's go in and short it, because you'd be shorting in daily demand. Okay, so maybe wait for some kind of pullback right around your 1250 area, right around there, and then wait for the continuation back down. Once again, this is on how the dollar is reacting for that given day. Okay, so let's go ahead and break it down to the 4 hour now. And I think I have this level right, or it's right around there, your 1260 area. Remember, these my white lines are just, all it means is just support and resistance. Okay, so we are coming into daily demand, guys. I wouldn't necessarily go long on it now. That's strong. That's a strong daily bearish candle for me. No wicks at all. So I leave it alone. I'd wait to see how low is it going to go, and then try to see if it's going to reverse on the 4 hour. If it does reverses on the 4 hour, I'd be looking for longs no more than your 1250 area. And then once again, this is based on how the dollar is doing. But what I'm trying to actually point here across is that these levels that I'm pointing out, you could write these levels down, your big 110. So these are actually even better numbers. Not only is it your big 110, you have 4 hour demand, and you have support on that level. It's just these three things that combine that if I'm shorting this euro dollar, if I find opportunities to short, I'm gonna gun for this big 110. So that's pretty much what I'm trying to tell you guys. I think the overall lesson for this week, guys, is your higher time frames. How if we start respecting these higher time frames, and they actually tend to turn around, then there's no reason for you to take day trades and try to go long. When you're seeing that the overall, that these higher time frame people, these are the big people here, guys. Now, maybe not necessarily all the way down, but just know that as we came up, we started creating demand levels. So they might not just take it all the way down. Now, if you're maybe into fib levels, you can start putting in your fib levels, whatever combines with your fib levels and your demand levels, and that's something you might be interested in. There's just so many ways, guys. The overall thing, though, is what is the dollar telling you for that given moment? Are you trading it in the long term? Are you trading in an intraday term? Are you scalping it? Okay. Um, I'm a big believer in this dollar index, and that's really what I'm trying to tell you. Anyhow, guys, as I explained it on the dollar index video, I'm looking to do little sessions on strategies or techniques. Um, I've been through so many courses and maybe taken about 8 to 12 instructors. But out of those, maybe 8 instructors have actually showed me different strategies, and I don't necessarily trade all their strategies. I actually, what I did is that I took apart every single strategy, and I only got what I wanted that fit my criteria, that fits my needs. And the way I trade may not be something that fits you, but you might want to get something and use it in your arsenal to trade. So I'm looking to start doing that maybe in the next coming week or 2 weeks. If you're interested, look at the comment sections below, or the details, and then make sure you sign up for the meetup class, and then I'll be posting the upcoming classes right there, guys. Anyhow, guys, that's it for the euro dollar. I'll see you guys on the next video. Take care.